So good morning, everybody. My name is Robin Burchell. I had a small introduction previously. I'm the executive chairman of Silver Bear Resources. We are building a mine in the far east of Russia, in the Sakha Republic. I'll run you through where we are currently, where we've currently got to with our operations, and I'll try and leave a few minutes at the end for any questions. So I'll try and get through this at a decent pace. So the company is TSX listed, ticker is SBR. We have a top co in Canada. We have an intermediary company in Barbados for tax purposes. And then we own the project 100% through Zalprognos, which is our Russian subsidiary. Basically, some highlights about the project. It's called the Managazeisky Silver Project. We have a series of deposits there. And we have an exploration license and a mining license. We have about 55 million ounces of indicated and inferred. The indicated is about 900 grams, and the inferred is about 457. So, as was mentioned by Leonid, Russian deposits are very much superior in terms of their technical characteristics. Our tailings grade is about the same grade as most head grades in Mexico, around about 80 grams a ton. We've got the 20-year mining license. It's a very large-scale area with numerous silver occurrences. So, as we drill further in exploration, we'll continue to add to this. Our strategy has been to put the mine into production to generate cash flow and prove that you can build a mine in the far east of Russia. Obviously, some others like Kinross have done it before us, but it is not easy. So we have a phased production plan, which we decided to start the construction with our equity partners prior to the completion of the 43-101 and the Russian feasibility study. Our view was that for a $50 million capex, it was really somewhat of a waste of time to wait until the feasibility was started before we started our civils and camp construction. We're accelerating that construction, or we've been accelerating it all through this year. We've raised about $16 million and spent most of it on the into the ground on the mine this year. We're very lucky to have extremely supportive Russian shareholders, or I don't think I'd be talking to you about this today. So here's our timeline. You can see that we raised, or I can tell you that we raised money in Q1 and Q2, and we raised some more in Q3, and we will most likely be announcing a further capital raising before the end of the year. The work that we, as a result of raising money during the year, we were able to order equipment and take delivery of certain amounts of equipment at the beginning of the year, and go into the early construction. I've got some pictures later that you can see of the work that we've done at the site. We're now in the project financing phase. As I spoke earlier about the banks, it's very difficult with the Western banks because they more or less have a self-imposed freeze on lending. But our major shareholders are we're creating with them a project finance-like structure so that we can take it out to a proper facility in probably the next 6 months with a bank. And hopefully Francois Hollande's overtures to Russia will help unthaw some of the relations between the West and Russia. The project, as you can see, is located in Yakutia. It's not particularly far away from Yakutsk by Russian standards. It's about 600 kilometers by road, about 400 by air. You can see this, it's in the Verkhoyansk fold belt, so there's a large number of other large silver deposits in the region, and some gold as well. It's an extremely well-developed mining jurisdiction. The city's about 250,000 people, 2 universities, one of which specializes in geology and mining engineering. it's it's quite an easy jurisdiction to operate in from that perspective. We hire mostly local. I would say 95% of our employees are Russians from the Far East, and only about 5% are from European Russia. There's 3 flights a day from Moscow. It's quite a long flight. It's almost a 7-hour flight. But if you need equipment, there's Caterpillars in Yakutsk, and we can get anything we need from Moscow within 24 hours. Just quickly, we had some changes in management at the end of last year, around about this time. We appointed Graham Hill as the new CEO, went through quite a professional search to find him. He has quite a lot of experience in building mines in the former Soviet Union. He's done an excellent job this year. We're very, very pleased with him. We also took on Dirk Hartman, who was previously a colleague of mine. He came on as the change agent when we made all the changes, and then we appointed him interim CFO. This is myself, and we've streamlined our board so that we have 3 non-executives and 2 shareholder representatives. Just coming on to the resource, you can see that it's a very, very high-grade deposit. Obviously, that's what allows us to have a very small throughput, low capital for the capex to build the plant, and as we'll come on to in a second, you can see the economics are pretty good. It's a high OPEX mine because it's low throughput, but the grade is extremely high. You're talking almost 29 ounces a ton or something like that. It's about at $15, the rock is worth about $442, something like that. So where we are, you can see in these pictures here, we've been laying the foundations. Obviously, that has to be done before it gets too cold. It has actually, winter has come pretty hard this year and earlier, much earlier than last year, so it's been cold. You can see that we've laid the foundations for the plant, and on this next slide, you can see the full camp that we've built. It's all fully winterized, allowing 80 men to live there throughout the year. Is quite a significant amount of effort to complete that during the summer months, and we're pretty happy with the progress we've made on that. Coming on to the next slide, this was taken in September. You can see that the snow was pretty early this year, so we had a bit of effort to make sure those foundations set properly, but we're happy with the work that happened. We've done a certain amount of strengthening of our team as well, incrementally added some additional people as we go into the full development and come towards production. As I mentioned before, we've ordered our mill from CITIC out of China. We've placed contracts with Electrometal, and this is just a selection, but these are really the main highlight items. All of these have been ordered, the Metso regrinding mill. All of this equipment is on order and will be delivered in the winter road, maybe as early as January 15th, because it's been quite cold this year, but normally it would be scheduled for sometime in February. We'll deliver all that steel work and equipment up the road going into the middle of winter. And once the equipment is there, we will start the construction phase of it. Some of it will have to wait until the thaw comes, but not all of it. There's been a lot of work this year on the resource. We have SRK doing the resource and Tetra Tech as the main consultant. So they've been optimizing the pit and the underground process. I'll come on to a little bit later. We have there's a series of open pits of very, very high grade material. It's quite a high strip because they're reasonably narrow veins, something between 1.5 to 3 meters. But we've tried to stay or keep as much open pit mining as possible because it's much easier, much safer, and allows us to get the throughput that we want into the mill. Just a little bit on the capital structure. So you can see on the right hand side there, Inflection and Atera are our 2 biggest shareholders. Atera is controlled by Alexei Mordashov, who controls Severstala and Nordgold. It's a fund set up by a friend of mine who works for Mr. Mordashov. who went to him and said, look, why don't you give us some money to invest in all the other mining areas that you don't have an exposure to right now. They've been a very strong supporter of ours. We're very pleased to have them as a shareholder. And about 18 months ago, with some help from them and from Sberbank, we were introduced to Sergei Kolesnikov. He owns a business that is one of the largest manufacturers of roofing tiles and other building materials in Russia. It's also in Eastern Europe and expanding to China. And he wanted to have a gold project or a silver project, a precious metals project that he could invest in, and he just liked ours and decided to invest and has built up his stake. And as you can see, as we've gone through the year, we have raised money in March, October, November. It's about $16 million. We've cut our G&A probably in half from what it used to be. So most of that money has gone into the ground. I would say about maybe $14.5 million has gone into the ground so far this year. So that's an overview of the project. I've got a couple more slides in the back that I'll show you in the appendix. But we're very proud of the fact that we're actually building this mine in what is a very, very difficult equity market. The cash costs for us are, basically I don't really care where the price of silver goes, because mostly everybody else will go out of business before us, because our cash cost is down below $6 an ounce. It's got a pretty decent IRR. Our share price, you can see, is where it is. I can't do anything about that. It's only the market that can buy or sell the shares. But we can build the mine, and hopefully, if we churn out something like maybe $15 million of after-tax profit, our market cap should be more than $5 million. Plan is to get us into production as quickly as possible. We'll be in production by call it November of next year. And then we will, we'll lay aside between $3 and $5 million a year for exploration. And we have a phased modular approach to the plant, so we can increase from 180,000 ton per annum throughput to a larger capacity if our discoveries through the exploration yield up significant ounces of silver. That's basically the story. There's a couple of other slides I'd like to show here. This is the economics. On the left you have the preliminary economic analysis, and on the right, more interestingly, you have the operating cost. But you can see that our op cost per ton is pretty high. You'd probably find through a large throughput, a 2 to 6 million ton per annum mine would probably be doing that at about $30 a ton, but their rock is only worth about $32.50 or $35 or something like that. Our rock is worth something, $400 and something, $440 a ton. So we have an enormous amount of margin there. And if, as some of the silver bulls will have you believe, the price is going up, we're very heavily ratcheted to a rising silver price, but we don't need it. And then just the final slide here I wanted to show you, which is the process. So it's about 5.5, 6 years of open pit on the current mining plan. We have a series of pits. We have the Vertikalny South open pit, which we start with, then we move to the Vertikalny open pit. Then we have the Managazeisky, which is a deposit that's about 5 kilometers away. We announced our maiden resource there. It was reasonably good on ounces. I was hoping something towards 10 million before we did it. We got 7.9 million ounces. I was slightly disappointed on grade. It was at 457 grams a ton. I was expecting a little bit more than that. But hopefully, as we do more drilling there, we'll see a slight improvement on the grade there, maybe up to the 600 or something like that. Just keeping an eye on the time here. I think that's probably it. I don't know if there's any other. Probably the last thing here I can talk about is this is the mining license here. You can see the yellow are the occurrences of silver that have been previously mapped either by soil sample or through drilling. And you can see on the right-hand side of the slide there, the verticality northwest, the verticality central, where the processing plant is and where the Managazeisky north is. It's all within a reasonably short distance of one another. We sited the plant on the top of the hill, and we'll be bringing the satellite ore from Managazeisky north. There's a deposit down the bottom right corner there called Nizhny Endabal. We've had a significant improvement in the resource there. That was down at 124 grams a ton or something like that, and with just a few million ounces, that has had a significant improvement over the last year. It's still, 322 is lower than what we have in the rest of the area, but it's still very, very high on a world scale. So we have lots of additional ounces that we can chase. So David, I think I've done that in a reasonable amount of time for you.
Perfect, and that leaves some time for some questions. Anybody got some questions? Whether it's about this presentation or just how Robbie's now doing business and developing the project. Well, obviously you'll be keen for. Oh, sorry.
Where will you be selling the silver to Russia? Who will you be selling the silver?
The way it works in Russia is that you have to sell it through a Russian bank, but that's really just so that they can clip a small percentage. We will probably send it to the refinery in Magadan. There's one in Magadan, one in Irkutsk, and one in Moscow. For the moment, what we're going to do is, we were going to smelt it on site, but because power consumption is diesel, is expensive, we're going to produce a 97% silver powder, fly it to Yakutsk and smelt it there. The cost for us for kilowatt hour at site is probably about 25 to 30 cents, and we can buy it off the grid from the nuclear power station at 6 cents in Yakutsk, and you're only talking 300 kilos of silver a week, so it's like 3 men. Just put it in an airplane, fly it down there and smelt it. Then you have your doré, and then that's not mine gate, but it'll be effectively our mine gate. It'll be bought from us at mine gate in Yakutsk, and then we don't really care what happens to it. We just get paid for it.
Will you be paid in dollars or who?
We get paid in dollars.
Any other questions? Well, I'm sure Robin will be eager to answer any questions you might have at the coffee break. Thank you very much indeed, Robin.
Thank you very much for that.
Hi, my name's Tom Bowens. I'm President and CEO of IG Copper Company, which is a private company, and the General Director of Amur Minerals, LLC. I'm here to talk about the discovery of the Malmyzh copper-gold porphyry deposit in the Russian Far East. It was listed this year, and it was discovered by Amur Minerals. It's a greenfields discovery, and the group's second greenfields discovery in 10 years of operations in Russia. The group that discovered it is my team, IG Copper, and we're joint ventured with Freeport-McMoRan. So Amur Minerals, being this joint venture, utilizes the exploration and in-country management expertise of IG Copper with the production experience of Freeport. Freeport's the largest publicly traded copper mining company in the world. As I said, it's located in the Far East. It's approximately 220 kilometers northeast of Khabarovsk and about 60 kilometers southwest of Komsomolsk on Amur, both along the Amur River. And in this slide, you can also see two additional properties of ours, Salasinsky and Shalahovo. I call it Sally and Shelley for short. It's much easier for us English people. Infrastructure is excellent. There's all-weather logging roads that traverse the tenement. It's adjacent to National Highway 46, and we were talking earlier about the Far East Fund and their desire to invest in infrastructure development. One of the issues we're having with them is we really don't need that much infrastructure because we're fortunate enough to be surrounded by it. We're 60 kilometers from the railroad at Komsomolsk, 1 kilometer from the Amur River, 220 kilometers from the Russia-China border, upstream along the Amur River. Access to North American markets is excellent. We can barge to Nikolaev's port at the mouth of the Amur River, or go via rail to Vanino port. High voltage power lines run adjacent to the Malmyzh property, and the there's also a natural gas pipeline which runs also adjacent to the property. There are 2 licenses that make up Malmyzh. Both are 20-year exploration and mining licenses, and they encompass approximately 150 square kilometers, which incorporates all of the Malmyzh district. It's a new and emerging district-scale copper-gold porphyry deposit. It's located, or as I've mentioned, it has excellent logistics. 14 targets have been drilled to date, all of which host copper-gold mineralization. Russian reserves were listed this year of C1, C2 reserves amount to 1.39 billion tons at a 0.52 copper equivalent, containing 5.6 million tons of copper and 298 tons of gold. That's roughly 10 million ounces of gold. If you include the P1, or the highest ranked resource to that, combined 2.32 billion tons, grading 0.49, containing 9 million tons of copper and just under 15 million ounces of gold, or 449 tons. A 43-101 was also done earlier, before the Russian reserves, and it has resources of 1.66 billion tons at a 0.42 copper equivalent. In addition, there's excellent potential to add additional mineralization as well as higher grades. And of course, as we've mentioned, the Russian government is very pro-mining, very helpful in our activities, and have recently reduced taxes in order to bring in additional investment. As part of the GKZ reserves, they completed a temporary conditions economic analysis. The numbers are shown here. These numbers are based on the current reserves and a full capacity startup. And the range of values given is based on the ruble to US dollar conversion rate. The first number being 35 rubles to the dollar, the second being 60. And we have a capex of 1.5 billion with an NPV of 134 million to as much as 1.7 billion US. The IRR is between 11 and 30% with a 10% discount. CapEx payback period between 9.2 and 5.9 years with a 37-year mine life. Net profit over life of mine from a minimum 3.86 to a maximum 10.7 billion US. Now, what's very important to remember about Malmyzh is that we're very early. We just had our initial maiden reserve listed. And because it is a large system, a district system, there's quite a bit of upside left to look at. Part of the reason for this is the character of Malmyzh. It's characterized by gently rolling forested hills with 1 meter to 50 meter thickness soils over the entire property. In essence, outcrop is non-existent. The initial exploration methods utilized were mostly stream related and soils. We coated the area where soils were less than 5 meters in depth with soil samples, and then also ground magnetic survey. Later stage deep map drilling was reserved for areas of particular interest. And what we ended up with were 14 original targets for drilling. 211 core holes were completed, just over 70 kilometers of drilling to date. All targets remain open at depth. And virtually all the holes that we've drilled throughout that entire property have been mineralized. You'll note at the bottom, the Bingham Pit, Batuhijo, those are their footprints to give you a relative feel for the scale of what we're looking at here. You'll also note, it's kind of hard to see it on my screen, I can see it up there, the darker blue areas on that map. Those are areas where the soils are less than 5 meters in depth. And that's kind of the area that we've been able to look at effectively up to now. So you'll see a lot of the district has not really been looked at yet. And this kind of brings that home. If we take a look at the 2 most recently well-known copper-gold porphyry systems, that being Oyu-Tolgoi and Pebble, you'll see their maiden reserves when they initially listed them. At Oyu-Tolgoi, Robert had 588 million tons at a 0.68. And in 2014, after additional exploration, he was up to 6.5 billion tons at a 0.88. Similarly, Pebble in 97 listed 1 billion tons at a 0.47 grade, and then after additional exploration went up to almost 11 billion tons. So our initial reserve is 1.4 billion tons at a 0.52, and we believe that'll go up significantly as we continue our operations. The key components in common between those three systems was large copper-gold endowments and extensive shallow cover over the deposits. Of additional interest is not only the importance of Malmyzh itself, which is the first copper-gold porphyry discovered in that region, but also it represents a new paradigm for the Sahokta-Alin metallogenic belt in the Russian Far East. The Sahokta-Alin is an area approximately 300,000 square kilometers in size, roughly the same size as Finland. The belt is now prime exploration terrain for porphyry copper and copper-gold systems, and I might add, for high sulfidation epithermal gold systems. The reason for that is the Soviets were concentrating in the area mostly on low sulfidation gold systems, so very high-grade gold. So they came across a lot of high sulfidation type alteration, quartz, sericite, porphyry copper type alteration zones as well, but they didn't look at them in detail. They just delineated where they were. So we know where they're at. Now we can look at them at our leisure. IG Copper will be focusing on those three types of deposits, the high sulfidation epithermal golds, porphyry copper, and copper gold systems throughout that entire belt. There you'll note the location of Sally and Shelley. Our additional licenses located on the same infrastructure corridor as Malmyzh, as well as the same metallogenic corridor. The Far East is really a preeminent and emerging copper and gold exploration terrain. And we appreciate the lack of attention everybody's been paying to that because it's going to make us rich. So please keep that up. Companies that are slow to enter the region, however, will kind of miss the boat here because eventually, especially the Chinese, are showing significant interest in the Far East region and in coming into the minerals exploration business there. There are some common misconceptions to Russia, and I'd like to discuss those a bit here. The first is that it's a very expensive place to do exploration. We've proven that isn't true. The IG team, along with Freeport, and the discovery costs at Malmyzh were less than 1/10 of 1 cent per pound. That's roughly 1/40th of the average for greenfield discoveries throughout the world. And the concern, the overriding concern for the last year and a half, really has been the geopolitical concern. It's important to remember that no foreign-owned mining assets have been taken in Russia since the 1990s. And no companies have been turned down for SIL approval. And if you compare that with some of the areas we believe are no geopolitical risk or very little, like the United States with Pebble, Canada with Prosperity, actually Google it and you'll find all kinds of mines being stopped from development throughout regions that are generally considered low risk geopolitically. So I would suggest people need to reconsider their thoughts relating to Russia in the future. And these are my contact details, and if anyone would like to get a hold of me, please feel free to do so. Thank you very much.
Any questions for Tom? Okay, Robert?
What's the age of the porphyry?
I'm sorry?
What's the age of the porphyry?
Cretaceous. Yeah, we've actually moved fairly aggressively since the discovery to grab up additional properties that I didn't show there throughout Cretaceous age intrusions and around them.
Have you found there's been a change in the licensing laws in Russia where you are able or easily able to be able to go and grab land now? Has that certainly helped you?
Yeah, now you're able to, one company can pick up 3 exploration licenses without going to auction. So we've been having to form new companies fairly quickly.
There's a will, there's a way.
That's right.
Any other questions? In which case?